Welcome and thank you for joining us today for the meeting of the New York City Health and Hospitals Audit Committee. Today's meeting is officially called to order. I'd like to propose a motion to adopt the minutes of the Audit Committee meeting held on February 3rd, 2025. Could I have a second, please?
Second.
All in favor, say yes.
Yes.
Motion's adopted. Oh, it's supposed to poll each individually. It's okay. I will now propose a motion to convene an executive session to discuss confidential and privileged matters. May I have a second?
Second.
All in favor, say yes.
Yes.
I did it again. Okay. I will now call-
People leaving now.
During the executive session, the committee reviewed and approved the fiscal year 2026 compliance work plan. The committee also reviewed and approved the fiscal year 2026 audit plan. Now we will have a presentation of the 2025 annual financial audit planning process by David Guzman and Camille Fremont.
Contract period, they are consistent with the past. I would just bring your attention to the fact that there is a corporation's 2025 bill offering, and as a result of that, we will be issuing various deliverables in connection with that. Turning the slide, we just highlight to the committee that we work with David and his team to consistently accelerate our audit work so that we're taking time out of our traditional busy periods of the audit and moving it forward so that that enhances audit quality as well as help to provide an exceptional client experience. Turning the slide, you will see your client service team, and we are very proud of the high level of continuity we are able to give the corporation. Again, Maria Tiso is your lead partner, supported by myself and Ryan. We also have various subject matter experts on our team. And then one thing to highlight to the committee is we are continuing to enhance our coordination between the corporation and the Metro Plus Health Plan audit. So I will be joining the team for the Metro Plus Health Plan audit. So you will have continuity at 6:30 and 12/31/25 for the two different timeframes. I'm going to turn it over to Ryan to go through our required communications.
Thanks, Camille. And if we could just flip the slide. So we will perform an audit of New York City Health and Hospitals Corporation in accordance with generally accepting auditing standards as well as government auditing standards. We do note that HHC Insurance and Metro Plus are not audited in accordance with government auditing standards. As part of our audit, we do consider internal controls over financial reporting, but not for purposes of forming or expressing an opinion on the effectiveness of internal controls over financial reporting. Over the next few slides, I will cover materiality, our timeline, risks, involvement of others, newly effective accounting standards, independence, and responsibilities. Materiality, so I'll cover materiality in the context of the audit. Misstatements are considered material if, whether they're individually or in the aggregate, affect the judgment of a reasonable user of the financial statements. Factors impacting materiality are both quantitative and qualitative. Materiality is also considered for a common group of individuals, not just for specific individual users. Judgments about the size of misstatements determine our risk assessment procedures as well as the nature and timing and extent of our audit procedures. The next slide covers our timeline. So as you can see, obviously we're well into June. So during this time period, we'll be communicating our audit plan, and we'll continue to work through our risk assessment as well as identifying the risk of material misstatement and our planned audit response to those. We continue to perform our substantive audit procedures, and we are currently completing procedures related to the bond offering and as well as issued the required reports and letters. Our timing for year end will run September through October. During that time, we will perform the remaining substantive procedures. We will evaluate the audit results and review the financial statement disclosures, as well as present those audit results to those charged with governance. Subsequent to October, the November through May 2026, and most likely further, we will perform audits for the statutory audits for HHC Insurance Company, as well as the Metro Plus Health Plan. We will also perform an audit of HHC ACO, and we will plan to perform attestation reports for the regulatory cost reports such as the AHCF1 and the RHCF4. That timing is dependent upon the issuance or the requirement of New York State. Moving on to the next slide, our significant risk that we have identified during the current year audit is the risk of management of override of controls. Management is in a unique position to perpetrate fraud given its ability to manipulate accounting records. Although the level of risk of management override vary from entity to entity, it is present at all entities nonetheless. Some additional risks, as well as evaluation of due to and due from third-party payers. Additionally, we do obtain, with respect to information technology, we do obtain an understanding of the IT environment, as well as the cybersecurity environment, and we do test generated reports utilized during the audit process. Some other areas that we do cover are cash and cash equivalents, grant revenue, appropriations, lease, debt, operating expenses, capital assets, and we also perform legal inquiries. Moving on to the next slide. This covers our involvement of others. So with respect to HHC's internal audit, we will review all the audit reports issued by HHC internal audit, and we will assess and evaluate whether there is a planned impact on our audit approach, and we also will ensure we have an appropriate level of coordination and discussion with internal audit. With respect to KPMG professionals with specialized skill or knowledge, we will utilize specialists such as actuaries in the areas of pension and post-retirement liability and the claims payable liabilities. Some of the newly effective accounting standards that are applicable to the year ended June 30, 2025 is compensated absences, which is GASB 101, and GASB 102, which is certain risks and certain risk disclosures. I'll cover them in brief on the next few slides. So GASB 101, which is compensated absences, requires that compensated absences be recognized for leave that has not been used and leave that has been used and not yet paid. And then additionally, a liability should be recognized for leave that has not been used if it's attributable to services already rendered, it accumulates, and is more likely than not that it can be used for time. You can use for time off or otherwise paid in cash or settled through non-cash means. Examples of this is vacation, sick leave, PTO, liability, holiday, and parental leave. An example that does not fall into this category is a sabbatical where there is no significant duties performed by the individual. The corporation currently has an accounting policy for compensated absences. Uh, and then as part of their response, they should evaluate their existing policy up against the new standard to ensure the appropriateness.
And what was the existing standard before the new standard?
What's going to happen under GASB 101 is more types of leave, like Ryan was talking about, that perhaps did not have to be recorded under the current GASB will now need to go on balance sheet. So there was a presumption that if you weren't going to pay something out upon termination, you did not have to accrue a liability. This new standard changes that, and you have to go through the facts and circumstances. So I know David and his team are working through the potential impact on that.
Okay.
So the expectation is that there will be higher,
Potentially.
More likely than not, but they're still going through the calculation.
and that's effective for 25, so for
Correct.
this year.
This is the first year.
Moving on to the next newly implemented accounting standard, which is going to be certain risk disclosures. So under this standard, we do note that a concentration or constraint that makes the entity vulnerable to risk of substantial impact, which is going to be 12 months from the issuance of the financial statements. An example that really could potentially be applicable would be a hospital workforce that may have a single collective bargaining unit. And governments are exposed to numerous risks, whether to acquire resources or control spending. Under the scenario of a hospital workforce that may belong to a single collective bargaining unit, in this scenario, if the hospital is currently negotiating with a labor union and the contract expired shortly after the balance sheet date and there had been no progress in the negotiations, a hospital would disclose at the CBA regarding the status of the CBA and the potential impact to operations if no agreement is reached, such as a workforce stoppage. So that would be an example of an application of this accounting standard. And again, this would be effective for June 30, 2025. Moving on to independence. Independence is a shared responsibility. It is a joint process with management and KPMG and governance to ensure that we maintain independence. KPMG internally maintains a system of quality controls to ensure compliance with the independence standards. Examples of this system of quality controls is evaluating employment relationships if they exist, monitoring changes in new affiliates, as well as directors and officers. Moving on to covering the responsibilities. So with respect to management's responsibility, management is responsible for the financial statements, even though an audit is performed, as well as they're responsible to communicate with those charged with governance. KPMG is responsible for timely observations that are significant and relevant for financial reporting. We're required to communicate with governance, management, and as well as external third parties. Additionally, we're required to form and express an opinion that the financial statements are prepared in all material respects with the applicable financial reporting framework. And lastly, we're required to establish an audit plan and strategy to obtain appropriate audit evidence. Lastly, the last slide I will cover is the related inquiry slide, or required inquiry slide. So throughout our audit process, we speak with several members of management as well as governance, and we inquire whether there's any significant or unusual transactions. If there had been any instances of possible violations of rises to the level of significance, we do communicate with the committee. At this time, I've covered our required communications. I'll open it up if there's any questions.
I had a question about pension obligations. Under our last audit, there was an historical issue with pension obligations. Where do we stand?
So from discussions with management, they have had constant ongoing communication throughout the year with the Office of the Actuary, and not just pertaining to pensions alone, but the misstatement was corrected in the prior year. We expect that, management continue to have communications, and as items arise within the industry, we continue to communicate with both management, and I believe we're going to be having some discussions with the Office of the Actuary early in the process to ensure that expectations and are aligned. So that is in progress and moving well.
Thank you, Ryan.
You're welcome.
Yes? Cecil?
Are there any outstanding issues from prior years that have carried over into this year? And if they are, what are they and what's the status?
At this moment, there are not any prior outstanding issues. With respect to, I guess, just to clarify, with respect to deliverables for deliverables due for June 30, 2024, there are cost reports that are currently in progress to be filed with the state. I would not consider that an existing issue, but just in terms of if we're really looking at calendar year, we still have cost reports that are due to the state for both the RHCFs as well as the AHCFs. With respect to audit matters, we've had, again, constant communication with management. We actually have a quarterly ongoing meeting where we openly discuss items and things such as potential impacts to HHC as a result of any legislation that may be coming through. So, there are no open items with respect to prior year.
And the cost reports are your responsibility to get to the state or HHC's?
Nope. So management prepares the cost report and they file them with the state. We issue an attestation opinion in relation to the report that's been done. So the dates of when those are due change frequently depending on the state says that they're due. So management does the report, they file it all. We just issue the attestation opinion over it.
Okay. And then how often, and maybe this is an every year thing, how often do you review like the SOPs that go into the financial operations, like how the data filters into the reporting systems and then comes into reports?
So maybe I'll try to interpret the question and make sure I'm understanding it correctly. But so management will do certain analysis, pull information from the financial system of record, or perhaps they have a spreadsheet that's pulling information from another source. So we look to understand how that information is generated, and then any report that we use to form a basis of our conclusion for the audit, we test those reports for completeness and accuracy. So depending upon the report, we will do different procedures over it. A good example is Ryan mentioned management override of controls and how we look to assess that, right? So we take your starting trial balance, so how we ended last year's audit balances. We get all of your transactions that have gone through the financial system, so all of the journal entries. We roll that file ourselves, and then we compare to your trial balance there. So that gives us completeness of the data, right, that was fed in. And then we utilize that and think of different ways that we want to look at the data and perhaps assess those. And then we request certain journal entries to see the accuracy of the journal entry to help us there. Does that help?
Yeah, so you start with the data to figure out what part of the process you're going to test for.
Yeah, so we start understanding.
We'll first start obtaining, for example, the SOP or the process. So
Okay.
if it's fixed assets, right, we're going to obtain management's process narrative on their process for going through and recording, an initial asset that is put into use, and we'll obtain that information. We're required to document that within our work papers, and then depending upon our evaluation of that process, as well as the financial activity that may roll through that individual process in any given year, we'll develop the planned audit response. So, for example, staying with the fixed assets, if fixed asset additions are significantly material for the year, what we'll do is we will obtain the information from the subsidiary ledger, we'll reconcile it to the general ledger, and we'll do a test sample. But it all really starts kind of at the process, obtaining an understanding and documenting management's process related to fixed assets.
And every year you just decide what processes you're going to look at.
We do. So we take a risk-based approach. So depending upon what we think is a risk of material misstatement, and then we like to incorporate an element of unpredictability. So David and his team don't know specifically which areas we're always going to ask. So we could vary that. There are traditional areas we'll look at. So valuation of patient accounts receivable. We'll look at that every year, just given the magnitude on the financial statements.